So what we're going to talk about in today's video, we're going to talk about the lie that they've been telling us how strong the economy is. Because I think you all know that the economy is not as strong as they're telling us. Yes, the manipulated GDP data is going up, but that's just because of record migration, both legal and illegal, and because of inflation. If you took out migration and you took out the factor that everything's going up 5-10% per year, we would be in a severe recession or even close to Great Depression levels. And if you ask the individual, are they better or worse off than 5 years ago? A lot of people would tell you they're now worse off. Yes, they may be earning more dollars, but those dollars are buying fewer and fewer stuff. And now it is starting to show in the data. They can't hide it anymore, people. So look at this. Consumer sentiment tumbles as inflation fears surge. So we've all seen the data come out that inflation is surging and the consumer is on life support. Okay, they don't have much disposable income left anymore. They don't have all the stimulus that they got during COVID. They don't have all the excess savings. They've depleted their savings. We see credit card debts at all-time highs. We're seeing credit card delinquencies skyrocket. We're seeing mortgage delinquencies skyrocket. And now we're getting the data. And the data always lags. The real thing you have to do is just go ahead and speak to your family and friends to know how tough things really are. So it says here, the University of Michigan Survey Consumer Sentiment Index for May posted an initial reading of 67.4 for the month, down from 77.2. So this wasn't a small drop. This was a massive drop because we've all seen what's been happening. Everyone thought that inflation was transitory, it was going to go away, but no, inflation is volatile. It may go down because they're comparing it month over month. If they have a big month, the next month may not be as high, but eventually it'll spike back up again. So it's well off the Dow Jones consensus call for 76. So they were expecting 76 and it's declined 12.7%. Also, the one-year inflation outlook jumped to 3.5%, up from 0.3% from a month ago to the highest level since November 2023. And this is because inflation has been surging and, we've seen all the central banks meetings. They're not doing anything about it. They're saying, no, it's okay. This inflation's all right. And the reason for that is they need this inflation. We'll go over why by this World Economic Forum's warning that they put out just a little while ago. They need this inflation because all these governments are bankrupt. And if they took out inflation, everybody would see the data for what it is, that we do not have a soft landing. This next article sums it up perfectly. The soft landing lie, a global economic slowdown, is already underway. And I'll go ahead and read this out here because they summarize it perfectly. So in the past 6 months, both the World Organization and World Banks released statements warning of an impending global slowdown. After an initial surge in exports and imports caused by massive pandemic stimulus measures, the effects of the helicopter money are now fading, like I was talking about earlier. By the end of 2024, global trade will register the slowest growth since the 1990s. That's right, the slowest growth since the 1990s, where we had some pretty bad economic data. The UN also suggested that the growth deceleration was coming in the next year due to falling investment and subdued global trade. Keep in mind that the alternative media has been warning about this outcome for the past couple of years, or at least after the COVID funding dried up. And that's what I've been trying to warn you guys about. Globalist institutions are simply informing the public at the last minute, too little, too late. And this is exactly right. This is why I try to warn people well in advance of things that are going to happen. And the unfortunate thing is, because I warn people so early, then they think it's never going to happen. What does the government do? They'll tell you everything's fine up until the last minute when everything collapses and then it's too late. So the World Bank asserts that the global trade is flatlining and international trade data supports this theory. China exports market plunged by 7.5% in March, far more than expected, and well below the 2.3% decline predicted by a major poll of the mainstream economists. So China is imploding right now. There was an article that just came out on CNBC. China is no longer the US largest trading partner. Germany is now the US largest trading partner. And this confrontation between the US and China is only going to accelerate and worsen the global economy. So here, by the end of 2023, European exports declined by 8.8% compared to a year earlier, and the Union barely avoided a recession according to the official numbers. When, again, if you look on a per capita, on the individual basis, they are worse off. It's only because of inflation and migration why GDP is positive. All hopes in Europe rest on the possibility of a steeper drop in inflation and central bank rate cuts. Well, that doesn't look like it's going to happen anytime soon. So, in the US, a net importer of goods rather than a primary exporter, consumer volumes have been in steep decline, which we just got more data from this. Inflation, Americans are buying less goods while paying more money. That's right. I don't know if you've noticed, but things are still going up crazy, especially food, utilities. So I just got a water bill. It was like $700. Every time I go now to the grocery store, things are more expensive. If you go to a restaurant or takeaway, everything is getting more expensive and the products are getting smaller. So you're paying more money and you're getting less goods. And this is how, like you said, like I was saying, inflation skews economic data. High prices on goods makes retail sales look great, but in reality, people are simply paying a higher price for the same amount of products or less. So again, you see all those mainstream analysts saying, look how strong the consumer is. They're still spending like crazy. No, everything's just more expensive. And look at this. Consumer credit data shows a steep decline in debt spending. Credit card delinquencies is at an all-time high. APR is at an all-time high, and debt growth has collapsed in the past couple of months. Again, because like I was talking about when we saw this credit card spending boom, eventually people max out their credit cards. Considering that American consumer is a primary driver of global exports, it makes sense that the international trade is now plummeting. That's right. The US consumer, European consumer, Australia, etc. We are big consumers. We're not really creating much. And now that everyone is broke, international trade is plummeting. Look what's happening in the trucking industry. I've been seeing lots of videos, people in the trucking industry being laid off. A lot of good jobs are going. And that's another lie that they keep saying, well, look how many jobs we're creating. Look at all these jobs. Yes, there are a lot of low-paying jobs, a lot of jobs that don't give much hours. A lot of the good jobs are going off-seas. They've become automated, and now AI is coming for the rest of the good jobs. So just like how when they say, well, look, GDP is positive, doesn't tell the real story. Just because there is a lot of jobs, it doesn't tell you that, yes, people are earning lots of money and the economy is doing great. They are low-paid jobs. The IMF has recently noted the signs of the global slowdown, but as usual, they argue that a soft landing is imminent. Well, I think we all know that's not the case. They claim there will be no serious repercussions for the economy. They do mention one interesting caveat in their analysis: the danger of global conflicts derailing the supposed recovery. Well, I think we all know that's very, very likely. We all know the West is not really cooling down tensions. Tensions are getting worse and worse in the Middle East between Russia and Ukraine. That's still ongoing. And China just may be waiting there for the right time to strike when the US has spent so much money funding all these wars around the world. Once the US has depleted a lot of their military supplies, then they may think, okay, now it's their time to act to take Taiwan. So wars leads to rising protectionism, the IMF says, and protectionism is a big no-no in the world economy. They don't want, countries to be independent. They want them all to be reliant on the three-letter global organizations. In a world economy based on forced interdependency, this is particularly true, but the bigger picture is being ignored. The world economy should be built on redundancy, not interdependency. Interdependency creates weakness and the potential for dangerous domino effects. This is a fact that globalists would never be willing to admit. So, the globalists have come out with a warning. But first, it says here, a global slowdown will become undeniable in the next 6 months, either right or before the US elections in November. I think it'll probably be just right after. The central banks have chosen to create this catch-22, and they are, for whatever reason, stalling the big drop. Why are they stalling it? Are they waiting for a scapegoat, like he says here? I think that's highly likely. Maybe they'll wait for another chaotic event, a global conflict. And then they can say, look, it's not our fault. It's, this conflict happening over here. That's the reason for all these issues. So, okay, the global economy is not going good. So what is the World Economic Forum saying now? Well, the World Economic Forum president says, we haven't seen this kind of debt since the Napoleonic Wars, okay? And it's about to get much worse with us, potentially heading into a huge global conflict between the Middle East, between Russia and China. Do you think that governments are going to slow down their spending? Do you think they're going to care about inflation? Do you think central banks will care about inflation? No, they're going to print. They're going to drop interest rates and monetize the debt, and the dollar is going to lose huge amounts of purchasing power and collapse. So look at this. Speaking Sunday at a World Economic Forum meeting on global collaboration, growth, and energy for development in Saudi Arabia, he warned that global debt ratios are close to levels not seen since the 1820s, and there was a stagflation risk for advanced economies. Well, I think it's no longer a risk. We can all see we are in stagflation. Weak economic growth, high inflation. The global growth estimate this year is around 3.2%. It's not bad, but it's not where it used to be. The trend used to be 4% for decades, okay? And he said there was a risk of a slowdown like seen in the 1970s in major economies. We're already seeing that. Trade will change and global value chains. Trade will change and global value chains. There'll be some more near shoring and friend-shoring, but we shouldn't lose the baby with the bathwater, he says. Then we have to address a global debt situation. We haven't seen this kind of debt since the Napoleonic Wars, and we're getting close to 100% global debt to GDP. That's right. All this growth we've seen on this crazy bull run, this 40-year bull run, has been on record borrowing. But just like how the consumer is tapped out, eventually the governments will be tapped out, or they will just print until their currency is worthless. His warning chimes with a recent report from the International Monetary Fund, which noted that global public debt has edged up to 93% of GDP, like we were talking about earlier. The fund also signaled out the high debt levels in China and the United States, saying that loose fiscal policy in the latter puts pressure on rates and the dollar, which then pushes up funding costs around the world, making the issue much, much worse. And like I talked about, the two biggest economies, United States and China, they're so heavily indebted, they're not going to be able to fuel this next global boom. So we said on Sunday that the biggest risk for the global economy now is the geopolitical recession that we are faced with, highlighting the recent Iran-Israel tensions. And it's no longer tensions anymore. They're now in a full-on conflict. There is so much unpredictability, and it can easily get out of control. If Israel and Iran escalate that conflict, we could see an oil price of $150 overnight, and that would, of course, be very damaging to the global economy. So everyone, I know what you're thinking, well, okay, what does this simply mean, and what can we do? For those that are just tuning in now, we've got a report the consumer sentiment is tumbling to all-time lows. We've been sold a lie of this soft landing. The economy is imploding. And the World Economic Forum is saying governments are not going to be able to use the tool they did to get out of recession last time by printing money because they're so severely in debt and their currencies will collapse. Well, everyone, there really is no easy way out of this. Either they stop the money printing, they cut back spending, there will be a severe recession, but then we can rebuild from a more sustainable base. Let all these zombie corporations collapse. Stop funding all these wars around the world. Stop sending all this money to illegal immigrants and give it to American citizens, Australian citizens, Canadian citizens. It's good to have legal migration, but this illegal migration is getting out of control. And what they're trying to do now is get you, the taxpayer, to house these immigrants as well. Illegal immigrants, should I say. So there's no easy way out of this. And I think they're going to try to pick the easy way by print and kick the can down the road. But again, that would make currency collapse. So what you simply need to do, you need to take matters into your own hands, not rely on the government to save you. You need to have all the emergency items you need on hand. You need to have a good amount of food supply. And food, if you've been buying long life food, some of this food, the preppers use, these long life food, they've gone up hundreds of percent over the past 4 years. They can actually be a good investment as well. And you want real money, gold and silver. So whatever happens to whatever currency you're in, we see a lot of countries right now whose currencies are performing a lot worse than the US dollar. Gold and silver is outperforming. We've seen this with the Australian dollar. And so you need to become your own central bank. You need to not rely on any government. So what do you guys think about this? What are you doing right now? Thanks for watching. You're awesome. I'll see you all in the next video.